Let's take a look at some charts, figures, and graphs on Litecoin for brave new coin. So Litecoin is a Bitcoin fork with a 2.5 minute block time targeted and a 4 times total supply. It is also merge mined with Doge, first suggested by Charlie Lee a number of years ago in order to secure the Doge chain. So really without that suggestion and implementation, Doge may not even be here today. If we look at the hash rate and difficulty for LTC or the script coins, LTC and Doge, hash rate has continued to increase thanks to price, thanks to Doge. Collectively, those transaction fees and block rewards really make a big difference in allowing miners to turn a profit. And miners are running numbers all the time on this stuff, so they're very aware that stuff like ETH is pulling in crazy transaction fees, and Litecoin and Doge as well. Very high transaction fees, and obviously Doge price has exploded, and that has helped as well. Script coins in heavy profit here at 4 cents per kilowatt hour, which is basically what anybody mining at an industrial level will get. If we compare that to ETH, however, even, it's funny, coming soon. These two aren't released yet, but when we compare that to ETH is still beating the script ASICs head to head, but my guess is that this doesn't include both LTC and Doge transaction fees and block rewards. The big thing really is that any older miner for these script coins can be run at a pretty decent profit, well past whatever their expected profitability was going to be. You know, there's one new miner, so there isn't a lot of LTC mining supply, script ASIC mining supply out there anyway. Here's the block times, here's the 2.5 minute retargeting, and overall it's been pretty good at staying within that time frame. If we compare the issuance of LTC in the dark blue here to the issuance of Doge, this is annual inflation rate, it's essentially in lockstep with Doge as far as the LTC and Doge inflation rates go, still lower than ETH currently, and still much higher than BTC or Monero down here at the bottom, sub 2% currently. So there's still a lot of block reward relative to some other stuff like Monero floating around for LTC and Doge, and the notional value of that per day is going to have a massive supply impact on price eventually. You know, when the miners decide that the transaction fees and the block rewards look good enough to sell, they're going to do so, and that's going to impact price certainly. If we look at the fee discrepancy, this is total fees on LTC versus Doge, and you can see it's basically a Doge show. It's all Doge here. Doge is 92% of the total fees per day currently on the two networks. And if we look at that in a head-to-head, I mean, Doge fees per day was hitting $164,000, which isn't that much relative to like ETH, right? ETH transaction fees hitting 70 million, 74 million. So in the grand scheme of things, not that much. But as a total mining share, you know, you'd have to figure out, is it better to mine ETH at a lower percentage difficulty relative to what you're able to capture on Doge and LTC? I don't know that answer, but that's the type of math worth looking into, obviously, if you're a miner. The other thing to note is these non-ASICs that are mining ETH have to go somewhere eventually, and that may be script coins, it may be anything else, you know, it doesn't matter. Talking about GPUs and chip shortages, all of that plays a factor into mining as well, obviously. If we look at the unconfirmed transaction counts on LTC over the past few months, for the most part, they've held below 300 transactions. So the LTC network hasn't really been super full. If we look at transaction counts, though, transaction counts continue to rise. So SegWit definitely playing a role in the lack of pending transactions here. This was some sort of Litecoin game called Lightbringer, where there was an initial spike in transaction counts that fell all the way down. And from there, however, Now, if you erase this artifact on the chart, you can see it's pretty clearly an uptrend for LTC. So it makes sense that LTC price is where it's at. And if we look at average transaction values, basically at an all-time high along with price. So there's a lot of on-chain LTC moving around. If we look at NVT though, price relative to market cap, so on-chain activity relative to market cap has been falling since February. So collectively, that's been a signal that, hey, trader, or hey, an analyst, things are looking more bullish than they have been for LTC. A rising NVT is bearish, a falling NVT is bullish. And then when you couple that with active addresses, it is a pretty clear picture of things have changed since January. Active addresses for LTC monthly, almost at all-time high, pretty far off from the weekly average all-time highs. But the big thing for LTC here is that this has been sustained since January, really since January 2020, it's been rising pretty decently. And if we look at Google Trends, compared to 2017, not that big of a deal. But if we zoom in a little bit over the past year, we've just kind of been surging here worldwide at all-time highs over the past, not all-time highs, but multi-month highs, certainly over the past 12 months. So yes, everything's selling off right now. Everything looks bleak, dire. LTC, based on the metrics, looks okay. You know, my targets for LTC remain 586 or whatever this moving average multiplier is based on what's happened in 2017. That's an N of 2. It's not a lot of data. Caveat, caveat, caveat. But I still like that as far as the market tolerance for potential upside. So this is the 1-year MA in the green, the 5-year MA in the red, and perhaps over time with supply that the tolerance for upside will decline. So this is probably the 2.5x, 2.5 multiplier of the green line is the midline here. If this is 5x, if I coded that correctly. So it's currently swimming around that level. If we're able to consolidate in a bullish fashion, I definitely like those levels for LTC or any chart that looks like this. If we switch gears to more moving averages, if we look at the 50 and the 200, still above the 50 daily moving average. Things changed big time in October, November, December, and then in January, along with every other alt on the USD pairs, kind of exploded. So it's not like we're not due for some sort of retracement, pullback, slowdown, reconsolidation, reaccumulation, whatever you want to call it. I don't think this is the top. I don't think it's over just yet. It's probably too early to call that. One caution to always pay attention to is when you're getting successive highs like this, if you're not putting highs in RSI and you're putting in arguably what are just continuous bearish divergences, you're getting higher highs in price, but not higher highs in RSI. So there's definitely a subtle bearish divergence going on here, but it's been so volatile price-wise and RSI-wise, it's hard to like look at that and think, okay, yeah, this is the top, right? This is the top. Nope, this is the top. Nope, this is the top. You know, it just keeps setting in those bear divs. Our 5-yearly pivot somewhere around 450. Not a lot of VPVR support on the way down. The 200 period moving average on the daily is sitting at 195-ish. So certainly don't want to go below that level. Daily cloud's been pretty good as well since November, telling you to get in. Hasn't yet told you to get out. It's been super volatile. I guess arguably you could say told you to get out here and get back in the next day, but lots of volatility on the USD side of things, even on the daily pair. Still overall looking okay. Now, if this gets below the cloud, if we get a bearish TK cross, that changes and we're in bear country at that point in time. But thus far, even pulling back from 380 to 265, things look okay. On the LTCBTC pair, it's really had this multi-year series of bearish continuation patterns or bearish reversals. It's had this mini head and shoulders here, this macro head and shoulders here, both of which broke down, another head and shoulders here below the 200-week moving average, and then just painting this painful falling wedge into all-time lows, which at this point has broken up. So as far as a mean reversion attempt, I certainly like higher highs to 01. VPVR likes that level as well. VPVR likes 0085. 200-week moving average likes 0.008. So based on the cloud edge-to-edge principle, it's certainly possible that we do see a continuation here. RSI doesn't even look too overheated just yet. So if you're into trading LTCBTC, it is a decent setup. It remains a decent setup for more upside, certainly. And lastly, I'll just mention the Enzyme.finance ETH-BTC fund and DeFi portfolio that I trade for Techemy Capital. And you can see everything here: AUM, performance, allocations, deposits, withdrawals, trades. You can see what I'm doing and when. All of it's done through DEXs, non-custodial portfolio management. Should you want to participate in that, you can deposit ETH or USDC. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.